What's up, guys? Welcome back to another trade breakdown. This is going to be very educational because this is where we talk about fundamentals, and this is the first time we're talking about fundamentals on this channel. Fundamentals are very important, especially if you're a swing trader like I am, or a day trader as well. They help you kind of understand the macros, what's actually going on. And today we're just going to be taking a deeper look on interest rates, right? We're going to be talking about interest rates and the fundamentals, the macros, and it's going to be a trade breakdown, but this is going to be on the educational section, which is kind of what all trade breakdowns are for. But this one's just diving a bit more into kind of like our first video when it comes to education. And yeah, we're going to be looking at the New Zealand dollar. We're going to be assessing what happened last week. If you're all on the group, you all know very well about this. I called it literally an hour before it happened, and we milked a lot of positions based off a purely fundamental trade. Now the technical stayed aligned, which obviously helps, but entered all those positions just based on a fundamental viewpoint that I had. And yeah, so we're just gonna dive right into it, right? So today we're gonna be talking about interest rates. Now, we had three positions that we took. If you can allow me to just go to trading view real quick. So we had three positions that we took on. We wanted to short the New Zealand dollar, and I'll explain why we wanted to do that. So we had this. So now this one was this was a very good technical trade, because I did talk about this in the weekly outlook, exactly what I was looking for, and it happened to perfection. Here I'm kind of breaking down. This is kind of like my what do we call it? Checklist, right? I just didn't have time to put checks here, but this is kind of my checklist whenever I'm doing these kind of things. But anyway, so we're just talking about the fundamentals for this. We're not even going to get into the technical analysis. And so I took an odd NZD trade. You see that was basically a 3-to-1. We did short a NZD CAD here, and our last position was a pound New Zealand dollar position that we took right here. Okay, so these positions happened very quickly, all at the same time. You can see big green candles. Positions were closed within seconds, right? And I'll post screenshots of the exact position so y'all don't think I'm just, talking nonsense. And I'll even post pictures of where I told people. Actually, I'll have where I told people right here, and then the results right here. And then you'll see like a really kind of like a 1 hour difference, less than an hour difference between when it happened from position to TP, right? So where did that happen? Well, today we're talking about interest rates, and I created a small summary here for you guys. So what is interest rates? So interest rates is basically, interest rates are determined by the country's central bank, right? So the US dollar, everyone knows about it. Jerome Powell, he's famous for all the memes and everything. He's the head of the central bank there in America, but probably not for long. If y'all keep up, you'll see what's going on with him and, Trump like 6-7 times now. Anyway, so yeah, they have a lot of issues. And anyway, that's besides the point. So the central bank controls interest rates. And what is interest rates? So interest rates is basically the cost of when you lend money, how much you're going to get back, right? So if you go and you lend 100,000 to the bank, there's bonds and there's yields, but you go and lend 100,000 Kenyan shillings to the bank, right? Let's just use Kenyan shillings because we're here in Kenya. When you lend that 100K, let's say there's a 6% interest rate, right? When you lend that 100K, you're expecting to get 106,000 in return, right? So the 100K that you lend plus a 6% interest rate on top of that, which would give you a total of 106,000. Or if you go somewhere else to another country, and let's say they have a 2.5% interest rate, and you give them the equivalent of 100,000 Kenyan shillings, and you only get back 102,500, right? Like, where would you go? Where would you put your money? You're obviously gonna put your money in the currency that will give you a higher return for your investment, right? And so here we have higher rates. As I said, higher rates equal higher return equals more demand equals stronger currency. So people want to hold your currency more if they get a bigger bang for their buck, right? It's just the logic, right? I think we all understand that. So lower rates obviously is the opposite. Lower rates equal a lower return, less demand in a weaker currency. Central banks adjust rates to control inflation and growth. I'll talk all about inflation and growth in another video. Global investors shift trillions across currencies to chase yield. So when we look at today's example, you'll see a 3% to 2.75%, and y'all are probably thinking that's nothing, like, well, that's just 0.25%. Now, to me and you, probably, but when you're moving trillions, 0.25%, let alone 0.5%, is a massive difference, right? And expectations, this is the one I want you to emphasize on. Expectations, not just actions, move markets ahead of time. So usually when countries have this different, because every country has a different scheduled meeting, which you can find on Forex Factory. So Forex Factory kind of summarizes for you when you can expect these meetings, and they have these meetings, depends, usually monthly, and they take everything into account. They look at the economy, they look how the economy is doing, and then they adjust and say, oh, do we need to raise interest rates or do we need to lower interest rates, right? Because there are pros and cons that come with interest rates, right? So again, that's for a separate video, but like it's very deep. Like I can talk about interest rates and a currency and inflation for a long time, and that is not the purpose of this video. As far as I'm concerned, when you click this video, you saw a trade breakdown, right? I know it's on the educational side, but it's a trade breakdown. So we're not going to get too into everything about interest rates because I do plan to make a video on this. But yeah, long story short, as you can tell, high interest rates make your currency more attractive. Low interest rates makes people want to take their money out of your currency, and it doesn't just happen the second they're lowered, because most people start doing that whenever they talk about, you know, a hawkish or a dovish stance. Again, hawkish is when, anyways, again, I'll explain that to you later, but it's the terms they use is hawkish and dovish. That's your homework. Go look up what hawkish is and what dovish is. Anyway, so let's finish with this last point. So expectations, not just actions, move markets ahead of time. So the New Zealand dollar have been talking about lowering rates for a while now. And that's why if you look at the 4-hour, even the daily, like we've been in a downtrend for a while. This is yuck, there's some messy price action here, but we've been in a downtrend for a while, and part of that is because we've been expecting some New Zealand dollar interest rates for a long time, lowering the interest rates, and most people were predicting a 25%, 25 BPS, which is a 25 base point cut, if I got that correctly. And here's where we got the trade right now. I've been doing a lot of reading. I do read articles. Yes, I am an ad. And, you know, from what I was reading from all these different articles, you know, most of them were talking about, so I actually read something in Reuters, and this is a bit after they already cut the rates, but they were really talking about cutting the rates by 50 base points, right? Which is basically double what they're expecting. And I read one on the Financial Times, I read another one on Reuters, and they're basically just, you know, trying to explain. It's long stuff. It's a lot. I read something about the Bank of Australia. It's not even the Bank of Australia. Commercial Bank of Australia or something like that. And they were just really talking about, you know, how the Australian dollar will appreciate to 1 point. Is it 1 something? 1.45 or 1.5? It's 1.45 or something like that. Yeah, 1.5. Yeah, 1.15, 1.15, right? And yeah, so basically the talk around was they're gonna cut it by 50 base points. However, if you go to Forex Factory, you can see, if I could just move this out the way. Okay, I'm just gonna have to reopen Forex Factory. But if you did go to Forex Factory, you would see, yeah, it was forecasted to be 2.75%, 2.75%, and I was looking at 2.5%. So what did I do? That means the market's gonna be shocked, and it's gonna cause a big spike, and people are gonna tank the New Zealand dollar. So I entered all three of those positions at the same time, and that was pretty much, I mean, first of all, these positions were anyways in good areas. So like NZDPAIRS was right here, it was kind of just breaking structure to the downside, so it was really looking good. Aussie NZD was just perfect. I mean, this was beautiful. I talked about this in the weekly outlook. It was really beautiful. This was going here anyway, regardless of whether they cut the rates or not. Further than that, and then GBP NZD was also something that was in some bullish order flow, right? Kind of, you know, we broke structure right here, and then went up. Actually, this is the trade we took, if I remember correctly. Yeah, it's not even this one. It's right here, because this is the one we took on Wednesday. So this is the trade we took, and as you can see, within minutes, by 4 a.m., it was already, we broke structure here. I was already looking for continuation longs because we are bullish, as you can see. So, yeah, those are pretty much the positions I took, and that is how you can pair some fundamental analysis with some technicals, because at the end of the day, the fundamentals is what drives the market. This just tells the story, right? So what's happening within the countries is what's actually causing all of this to move. This just tells you what the buyers and sellers are doing, right? So you always have to remember to take what's actually happening more seriously, and that's how you can just use a simple base knowledge of the fundamentals of the macros and what's happening in different economies, something I'm obviously passionate about, and you can just take that and be able to frame really good trade ideas just based on that alone, just taking even the technicals out of it. And yeah, that's how we got our 3 wins within seconds. I think one took like 9 seconds, the other one was like 13 seconds, and the other one was like 20 something seconds. It just skyrocketed to TP once the news came out that it was 2.5. So yeah, I hope you enjoyed the video. This is going to be the first episode of a breakdown. I think this might be a glitch, I don't know what's happening here, but yeah, this is going to be the first episode of a breakdown, educational breakdown, but it is a trade breakdown, so it will go under the episode 3 or 4, whatever episode this is. And yeah, I hope you enjoyed, and